The ceasefire might be holding, but recent tensions show how global conflict can hit home, from fuel and food costs to KiwiSaver and mortgage rates.
We are back in your life, and Donald Trump is causing much more strife. Michael Vincent.
Yep.
We're talking about topics today that is very much front and center in terms of the news.
Yep.
The US, having strikes on Iran.
Yep.
Let's break this down to a few different bits. So today what we're going to talk about is exactly what's happening, how it impacts the economy, and then what should you do off the back and how should you think about your decisions.
Yeah, I think it's probably pretty important to point out this is not something on the validity of what they're doing or anything like that. What we're concerned about is how global events impact Kiwis' finances and investments.
So, Mike, give us a little bit of background without a full political update.
Yep.
What's going on at the moment?
Where we're standing at the moment is we've had the Israeli-Palestinian conflict going on for quite some time now, where they're actively fighting Hamas. During this process, Israel has decided that they're not happy with the current status quo of the Iranian nuclear program, and basically the fact that Iran is funding a lot of kind of proxy groups and wars throughout the area, right? Especially in the north. So they've gone, now's the time to strike. We're going to go out and do it. We're going to demolish the entire Iranian nuclear program because we think they're enriching uranium to kind of military grade levels. America came out and were like, I don't think you should do that. That's a bad idea. They went, well, we just did. And America went, oh yeah, that was a great idea. We fully supported that. We're going to do it too. So that's basically where we're at the moment. Iran will retaliate. A lot of the time it's just kind of like a gesturing or posturing kind of retaliation as opposed to an actual retaliation, which I think their last one was. And then that means that they're now at a level where they've done a little bit of negotiation because Iran fought back and they're at a very tentative ceasefire.
Yeah, so it is important to say that this is changing by the hour and by the day. We're filming this on Thursday, the 26th of June. Yeah. Right now, Mike, there's probably a few key pieces to think about. One is always the phrase World War III. I've heard multiple times.
Nah, I can't see that happening. It's basically all but done, right? Like, really, if you look at it from a risk perspective, if you look at geopolitical perspective and at home perspective for Iran, what are they going to do? Like, really, if they kick things off and I just cannot see it being dragged into World War III. Iran doesn't really have a move to play here. And the wider community doesn't want to be dragged into World War III. They're already avoiding World War III in Europe at the moment. So I very much doubt that they're going to be dragged into this in the Middle East.
Okay, let's say World War III is not going to happen tomorrow.
Nah.
One thing that might impact a small island nation that tends to import quite a bit of stuff is how we get it all here, which is done through oil in lots of cases. Around 20% of the world's oil passes through the Strait of Hormuz. Which has come under conflict. There's question around whether it's going to allow oil to go through.
Well, they did shut it down for a little bit. I'm not sure if it's still shut down, but they did shut it down temporarily.
One piece though, oil prices have jumped between 5 and 11%, peaking around $78 a barrel USD. Yeah. That creates quite a bit of risk for us if oil prices.
It does create quite a bit of risk. I don't mean to talk everything down here. I am involved. I do think it is a serious issue. I'm not doubting that. But oil prices aren't anywhere near up around that $100 a barrel. Most of this was already priced in at the pump anyway because, reasonably speaking, everyone could kind of see this coming. It's not like it wasn't telegraphed by everyone of their intention. So, it was priced in at the retail pump. I think actually the real risk is probably a little bit more medium to long term, right? Where oil prices spike. We've got some other things spiking at the moment. Well, it's going to block some shipping lanes as well. We saw that with that giant tug that got sideways in Egypt or something can block that shipping lane. We saw it with COVID. When shipping slows down, it causes the price of things to rise. If oil prices also rise at the same time, and we've also got rates, going up as well at the moment, that creates a lot of short-term inflation and inflation shock, right? So you might get an inflation shock, which the Reserve Bank will turn around and go, well, hang on a second here. We've just been through this. Not only are we not cutting, we might increase, the OCR a little bit. You have unemployment, which is going up, and you won't have the associated growth that you usually get when rates are increasing. We call that stagflation, right? costs going up, unemployment going up, GDP and growth going down.
And cost going up, inflation going up is tied to oil prices going up.
Yeah, well, that is going to drive everything up, right? That drives shipping up. That drives the manufacturing of a lot of plastic goods up. It drives just petrol up as well, right? So you may get, harking back to, I think the 70s, the last time we had a little bit of stagflation. So that's not really great for an economy, right?
No.
You got the worst of all worlds. How likely is it we slip back into that? We're a long way off yet. That's kind of the worst case scenario. Again, I can't see everyone being dragged into World War III. I think the really interesting thing is, what does this mean for your investments and what does it mean for your finances?
Yeah, for sure. And a lot of what we're talking about, and I think it's just really important to separate the conflict versus the impact on economic markets, right? When we're talking about the impact on economic markets, it's pretty much like insert other issue. We think about the issues we had around Trump and tariffs, Ukraine and Russia conflict, very similar sort of discussions in terms of a lot of uncertainty. This will probably be okay, but we don't know. And the medium to long-term impacts, I've definitely heard you use that phrase before.
Yeah, 100%. And I think it's really important to just look at what have the markets priced in, because markets are always forward-looking. The markets have not priced in World War III.
Yeah, in terms of like the S&P 500, it's up this week, which does, it is important to say there is a difference between markets and economies.
Yeah. Is the S&P up because of really specific stocks that do well off the back of conflict, or is it up just generally?
A lot of this has to do with investor confidence.
Yeah.
And investor confidence certainly hasn't dropped with the market going up, but there's probably areas that you're thinking about in particular in terms of winners and losers, right?
Yeah. And again, with every kind of situation or event or, war or something, there's winners and losers from an economic standpoint, right? So you might drill down into the data and see that actually stocks that, would be useful in a conflict have gone up, while some others have gone down, right? So again, we're looking at the market at a kind of homogenous level, like in terms of the S&P 500. And, we're always preaching a well-diversified investment fund. If you're picking direct stocks, if you're trying to pick them off the back of a conflict, man, you are in for a rough ride. So I would say, let's just look at what is the market pricing in. S&P's up, so the conflict can't be that bad from a market's perspective. With any conflict, with any uncertainty in the media, a lot of people will be thinking, what should I do? And we're going to talk about that after the break.
Hey guys, really excited to announce that we're going to be working with one of you for 12 months. You'll be working with me personally as your financial advisor. The catch is we want to document the whole journey. If you are interested, if you go, this is what I've been waiting for, click on the show notes below, make sure to apply, and who knows, maybe you'll be on the podcast soon.
All right, James, so what should people do?
So I think the big thing is, if you look over the past 5 years, right, a lot of things have happened. We've had the pandemic, we've had collapses, we've had wars, we've had market chaos, inflation, cost of living. If I take it to another extreme as well, I also talk to clients where they're like, I'm not going to buy a business or an investor property because I'm worried the government's going to change or a change is going to happen or whatever it might be.
Yeah.
Things are always going to happen, right? And if you're changing your financial plan to what is in the news, you're never going to get anywhere.
I think this is one of those points where we need to reflect on the fact that these are long-term investments and you shouldn't be making short-term decisions about long-term investments, right? There will always be another war, another this, another that, another collapse, another stock market this. These are not the reasons that we would make decisions about our finances.
And if you look at it as well and go, despite all of that happening, the share market has doubled in value over the past 5 years. So the real lesson is volatility is normal, and you just have to look at your situation and not try and time the markets, not worry about it, and go, what are my goals? What is my strategy? Where do I want to get there? All of these things are going to continue to happen in the short term. It's not like the next 5 years is going to be rainbows. We're going to be having a lot of content, things to talk about in terms of what happens in the world, because it's never straightforward.
Yeah, 100%.
So the main thing is going, what is my plan, building it and sticking to it and ignoring all of the noise. Mike, one question for you. Does any of this impact, you mentioned potentially the OCR going up. Any concerns about mortgage rates?
No, not really. I think the market's priced in pretty much where they think the OCR is going to head. Let's say we don't get a cut in next week or the week after on the 9th. I don't think that's the end of the world. Again, we just look at things on a long-term basis.
Yeah, and we're going to have Jared Kerr, Chief Economist from Kiwi Bank, join us on the OCR announcement as well. So make sure to subscribe and review so you can stay in line for those. The only other one I talk about is KiwiSaver. KiwiSaver, so markets haven't dropped, but they could have.
Yeah.
And the main thing is you just have to ignore this. If you are worried about volatility and your investments dropping too much, you're probably in the wrong risk profile.
Yeah, and I think again, like if you saw the news and first thing you thought was crap, I've got to check out my KiwiSaver, like stop. Like that is not what you should be doing. We saw this in the pandemic. Markets crashed. Everyone shifted to conservative funds. Markets didn't even crash this time. So not only if you shifted it to a conservative fund, you probably missed out on some gains. You've now got to go back if you want to be back in the right risk profile. And again, it's going to cost you.
Do you know a stat I'm really proud of, Mike? Guess how many of my clients have contacted me with this news?
Zero.
Nice.
Yeah. That's what I like.
And that's the big thing is just you need to just completely ignore this. Think of the long term.
Yep.
If you're worried about your investments dropping because you've got a short-term goal, you're in the wrong investment to start with anyway.
Yeah.
Anyway, we'll wrap it up there. Much love to Lighthouse for sponsoring the episode. Give us a review, subscribe, and we'll catch you next time.
Cheers.